Good morning. First, I'd like to start by saying thank you very much for having me here today in Seoul. I'd like to thank Asia Business Daily for inviting me to come and speak. I've been based in Hong Kong for 23 years, one of the big financial capitals of the world, reading the financial press, and every time I see a story, whether it's in the Wall Street Journal or Bloomberg, if they say, as reported by Asia Business Daily, I'm happy because I know that it's going to be a good story, well reported, and so I was really excited to be invited and come here and speak today in Seoul. Just by way of a little bit of background, I look a little bit different from everybody else in this room. It is an Asian financial forum, but don't worry, I don't know if I adopted Asia or Asia adopted me. I've been in Asia since 1995, in Hong Kong since 1996, started a little bit early when I was still going to school in Canada. For 1 year, I was the president of the Korean Society at McGill University in Montreal. So Korea has a special place in my heart. But I ended up in Hong Kong. Like some of you that have a little bit of gray hair like mine, maybe you're hiding it, that's okay too. But I was in Hong Kong for the big boom in the mid-90s, the Asian financial crisis, then the dot-com boom and bust. Then later in Hong Kong, we were hit by SARS, another financial boom. So I've been here, I've seen it, and we can see some of the things happening again. And some of these trends are going to be seen in the institutionalization of the digital asset industry, and that is what I am here to talk about today. So once again, 감사합니다. Let's go. Thank you. Oh. So very quickly about the NexChange group that I work with. We were founded 5 years ago, joint headquarters in Hong Kong and New York. We work in the areas of smart city, artificial intelligence, but especially fintech, blockchain, and health tech. Some areas we create, we market, we invest in, and provide access to innovation. We like to think that we sit at the heart of and we support the global innovation ecosystem. We have three main lines of business. Media, I head up the media division for Asia and Europe, and that includes our media reporting everywhere from the Philippines all the way to Moscow. We also put on major events. Fintech, our major brands in the event space are Fintech 020, Blockchain, Block 020, Health Tech 020, and about a month ago, we ran the first ever Hong Kong Blockchain Week. We had 4,000 people come from around the world to Hong Kong, 15 events, very exciting, and I will share some of the things that we learned at that today. The other two major divisions in our group are the Capital Group. The Capital Group is investing, advising, and accelerating companies that have innovative products, and we are also launching a digital investment bank. Now, if I'm running the media group, who is overseeing the whole thing? That is our CEO, the founder and chairman of the NexChange Group, Mr. Juan Lee. Again, another connection to Korea. Some of you go, wait a second, he looks like one of us. He is. He left Korea when he was very young, was educated in America, went to Berkeley in California. He was involved in making investments in the early days. He was part of the teams that invested in companies like Yahoo, Netscape, Eidos. Some of you, maybe when you were younger, played video games, Tomb Raider. He was involved in some of those early investments in Silicon Valley, but went on to have a huge career in asset management, Rothschilds, Montgomery, Sack Capital. He worked in Shanghai with the biggest asset management company there, but especially JP Morgan, until he left the world of banking behind. He took off his tie, never put it on again, and became a technology entrepreneur and founded NexChange in Hong Kong and our other headquarters in New York. So, heading up the finance side of what we do. All right, so that's enough of what we do, and now you know why we're in this sector. Why digital assets? Why might institutions like the ones that you work with be interested in this whole sector at all? First of all, it's a new investable asset class. It's always interesting, both from the point of view of investing your own firm's money, but also your clients. It really started to change in 2017. The beginning of 2017, it was about 17 billion in the sector. It ballooned up to 800 billion. Of course, that was a big boom that we had in that year, and then it shrank down and now is tracking a little bit over $200 billion in assets. But it's small, but growing. And I'm going to walk you through where the opportunities are in this sector. Correlation, or rather, it is uncorrelated in many ways from traditional assets. Now, that may change as more traditional assets are digitized, as they are brought into the digital asset sector. But for now, there's a bit of a disconnect there, which might be interesting for your portfolio management. Value creation. This form of finance is intimately connected to blockchain, which is itself as a technology developing, which you heard a lot about today from Professor Lee and other speakers. And so there's interesting opportunities there. There's a lot of capital entering this market. It is growing. How many of you saw the announcement last week that Harvard University, probably the second best university in North America, right? McGill, number one. Harvard University, the endowment fund, $39 billion assets under management. They announced last week that they are going to be making their first investment in the digital asset sector. Right? How many of you saw that news? Some of you, I saw some heads nodding, yes, yes. So there is more capital coming into this sector. Now, the Harvard Endowment Fund is not putting all $39 billion into digital assets tomorrow. They're going to start with a small investment, 11 million US dollars, but it's a beginning for them. And there's more and more people doing this. Another reason why people are interested in digital assets, liquidity exits. It helps to make some categories of investment more liquid to enable you to exit earlier than you otherwise might be able to do. And this is attractive for a lot of investors. The final reason that I want to talk about is that there are inefficiencies in this sector right now where if you have the contacts, if you have an ecosystem and access to a pipeline of deals, the inefficiencies in this sector create opportunities to capture alpha, right? And for some investors who've been looking for more opportunities to play in the alpha part, this is interesting for you. All right, so let's talk a little bit about the current state of play. Right now, the sector is tiny. If you compare it to some of the major traditional assets, bonds, stocks, and let's just take residential real estate as an example, 513 trillion, it is still a tiny, tiny sector. But the assets under management that are being professionally managed are an even tinier percentage. If we look at those traditional asset classes, about 17% are assets under management. Whereas in the digital asset space, it's like 3.8%. So if you think about it, if the current base of assets under management, if that grows within that tiny, tiny base, that's still an interesting opportunity. But we think the category as a whole is going to grow, and more of it is going to be professionally managed. People are going to want to have it managed by professional managers, have more assets under management. That's going to be interesting. Digital asset fund launches. Obviously, you can see from this, 2017 was the turning point. Over 150 funds launched. 2018, more. All right, it is growing. About 450 digital asset funds are out there right now around the world. And so this is very exciting to see new launches coming online. Who are some of the big digital asset funds? A lot of these will be names that you know because you are in the business. Andreessen Horowitz, $300 million fund when they got started. Block Tower Capital was funded by some of the Andreessen Horowitz people, put some of their money in there, along with Union Square. Those are former Goldman Sachs people that were getting behind that. We've got Fenbushi Capital out of Shanghai. I know Professor Lee, who was up here earlier. He knows Remington Ong, one of the big players there. He spoke at our event last month in Hong Kong, and they're making a big impact in the industry. I'm sure a lot of you know famous hedge fund manager Mike Novogratz. Mike Novogratz founded the Galaxy Digital Assets Funds. He's a billionaire by himself. Forget what he's managed in the past, but he has fully committed to this sector. Pantera Capital, former CFO from Tiger Management. All right, this is the business. These are people from the traditional hedge fund world that are committing to getting into the digital assets. So when I say people are moving in, These are some of the people we're talking about. The Americans, as in so many other things, are dominating. I'm proud to say that Canada's even on the list, but the next big player, China, and of course that really means Hong Kong, where I live. And we see that action happening, and it's very, very excited. Of course, a distant second to the Americans, but the UK, London, still in there. Singapore, the regulatory environment is still open to allowing digital asset funds to become established. Switzerland. For those of you that are new to the sector, you might not have heard of ZUG. Easy to spell, 3 letters, Z-U-G. They call it Crypto Valley, and they've created a regulatory environment that's quite favorable to the establishment of these funds. So, but here's, when we look at this, when I say it's a tiny industry and about to grow, most of these funds, almost 50% have less than $10 million under management. That's tiny, right? We're looking at 350 some odd under 50 million, right? It's still very small, but the sector is growing. And here's where it gets interesting. In English, we have an expression. History doesn't repeat itself, but it does rhyme. It's never exactly the same, but you can see the similarities. And like I said, some of the people that have a little bit of white hair like me, and if you're in the hedge fund business, you'll know this story. So hedge funds didn't really get on everybody's radar until 1992, when George Soros took a run at the Bank of England, right? And some of you know about, if you know your financial history, that was a big, big moment. Right, and that was at the beginning of the hedge fund industry really taking off, and people sitting up and going, wow, something exciting is going on here. But it was still growing, it was still developing. It was 10 years after that before we had the first AIMA, the Guide to Sound Practices, where things really started to become established. And if you look at the growth of hedge fund assets under management, it's been through these phases, the early stage, right? Then they institutionalized. 2007, bam. People call it the global financial crisis in Hong Kong. We call it the Atlantic financial crisis because most of it was in the United States and Europe. Hong Kong was fine, China was fine, Canada was fine, Australia fine. But it had a big impact on the hedge fund industry. So then there was consolidation in the industry, and now it has started to mature, right? The other thing that's interesting about this, and we'll touch on it again a little bit later, is that the establishment of the quant funds. You can see the lighter section under here, and this is where the quant funds, and what that has meant is that it's become more difficult to capture alpha in the hedge fund space as the quants became more dominant. But where are we? In this stage of development with digital asset funds, we're right here at the beginning. We are at the beginning. Things are just getting started, which is what makes it interesting. Who's putting the money in? Digital asset, funds of funds. We talked a little bit about some of those sources of money before. There are going to be major players in this. Family offices. Where I live in Hong Kong, that is a big deal. My wife is the CEO of a family office. They're major players. There's a lot of capital to be deployed, not just in Hong Kong, of course. Singapore is a big player, Switzerland, all around the world. I am a Gen Xer. I know a lot of you were thinking millennial when I first got up here, but no. In fact, Gen X. They talk about the millennials being digital natives, but it was my generation that built the internet, right? But a lot of the people running the family offices, they are like the people who are building the digital asset industry. And some of them, even younger, they're going to be blockchain natives that are coming into these family offices now. They've grown up with it. They're comfortable with the concept of digital assets. They're comfortable and they like cryptocurrencies. It's not hard for them to get their head around it, and they are starting to have influence in the family offices, which makes it interesting. Venture funds, we talked about before, Union Square, the Andreessen Horowitzes of the world are piling money in. Hedge funds are starting to put money in. I talked about endowment funds, and then, of course, high net worth individuals have been, big players in this market previously. However, I'm here to talk about the institutionalization of this sector. There are challenges. There are challenges for those of you that run institutions. You say, oh yeah, this all sounds great. However, as an institution, we have different needs, right? We operate under different rules. we have different issues. Some of the challenges are the ability to scale, given the strategy, the capability to deploy different strategies, and we'll talk about each of these in detail. Risk management, when you manage risk at a professional level, it's different. You have different demands and different needs. One of the things that is key is the ability to lower volatility, right? This is a big challenge, and I'm sure, you know, when I said from 17.7 billion to 800 billion down to 200 plus billion, that's a lot of volatility, and that needs to be addressed. Supporting systems, very important. The technological infrastructure, the human infrastructure, all these things need to be addressed. That is directly connected to back-end operations, and we'll talk about that in more detail. And custody. You know, we ran Hong Kong Blockchain Week last month in Hong Kong, and everybody was talking about custody issues. I don't know how many of you are following, a little embarrassed, but there was a case in Canada where somebody was holding a digital asset fund, and he died, right? And he was holding the money, and he had the private key. But then everybody was running around saying, where's the key? How do I even find my money if the only guy that had the access to it is dead, right? They found the key. They didn't find the money. That's another story, all right? But we'll come back and talk about custody. But we do need to talk a little bit about the current market structure and what it looks like. I spoke to a couple of the CEOs of some of the sponsors of today's event, and I said, I'm talking about digital assets. And they said, Bitcoin. I was like, yes, but more. There's more coming. But I understand why their first reaction was Bitcoin, because it still dominates the market. If I update my numbers, Bitcoin probably a little bit less now, but Ethereum, the big names that you know, Ripple, we've been talking a lot about Ripple and Swift on our platforms, but you know, this still dominates. But as the industry grows, it's going to flow into other digital asset classes. I talked about the funds, I talked about the size of the funds, the assets under management, very small. One of the consequences of this is that these organizations do not have a lot of people. This is a problem for institutions. Why do you need more people? AI is not going to do everything. It is because it goes to the ability to scale, your ability to deploy different strategies. If I'm an institution, I go to a fund and I say, tell me about the different strategies that you're deploying. If you've got 5 people, you may be what we call in English a one-trick pony. There's one thing you can do reasonably well, but that's not good enough for institutional investors. These organizations, the funds, need to bring in trained money managers who have venture capital experience. It's vital. Some of them are doing that. The bigger ones, of course. Sometimes people have left the traditional financial sector to go into this, like I talked about Michael Novogratz, but that has to happen across the entire digital asset industry. We need people who can manage large amounts of capital. It's different, right? When you are managing, as the amounts of money get bigger, to enter positions, to exit positions, it's a different skill set, and we need to have people with those kind of skills in this sector. So scalability is really hard for these organizations. You need to be able to execute on different types of strategies. That means being able to short. You can short Bitcoin now, but for other digital asset classes, that's not always possible. But those tools are being developed. So portfolio stop losses, position stop losses, you have to be able to assess your value at risk, and manage a proper diversification strategy. All these things need to be addressed to satisfy institution. I talked about volatility. Volatility is important. Liquidity helps with volatility issues. The centralized exchanges are starting to be able to provide tools that enable you to move in and out of positions faster. They're providing advanced tools to get in on some of these. Some of the major institutions are talking about developing cryptocurrency desks, but they're just talking. They're not there yet. It hasn't happened. There are still issues in converting fiat currencies. You want to take your Korean won or your US dollars into a digital asset position, and then you want to get out. There's still some friction there that needs to be worked out. It is getting better, but still friction that needs to be worked out. Security tokens are looking to bring digital assets into and closer to a traditional framework. I was really excited to hear the chairman of the FSC this morning. Korea We look to Korea from Hong Kong and other parts of the world. We look to see what Korea is doing and where they are going on regulations, because if they move ahead, things like security tokens that are looking to bring digital assets into a traditional or closer to a traditional regulatory framework will help to reduce volatility. Another big topic at Hong Kong Blockchain Week. Valuation. Institutions need to have a framework by which they can evaluate digital assets or a portfolio of digital assets. There are challenges in using the traditional models and applying them to this new asset class. This is really tough. ICOs were a big thing, and just as everybody was getting a sense of how that worked, they got killed off in a lot of places. They're not so much in play. Utility tokenomics, then everybody was trying to get their heads around that. Now everyone's looking to STOs and trying to figure out how are they going to be able to value these, these instruments. So it has been challenging. There are people addressing this. One of my favorites is a company out of Portland, Oregon, Smith & Crown. They've made a bit of a name for themselves in developing models for valuing these companies. They work directly with traditional investors who are looking to get into the space. But it still remains a big challenge for institutions. Supporting systems, and this, of course, the back office is what we're talking about here, monitoring, reporting, compliance with regulatory issues. If you've got 5 people in the company, how big a reporting function? How big is your compliance team going to be? Not big. Proper professional risk management, proper professional portfolio management. How is all that going to be introduced? It's a little bit of a chicken and egg. The funds, more has to come into this sector for the funds to get bigger, but the funds have to get bigger to support the infrastructure. So this is all a challenge. Digital asset exchange fragmentation. There are literally thousands of these exchanges out there right now. So if you're an institution, you're trying to track digital assets, they're everywhere. They're everywhere. And this, again, is a challenge. Custody. I talked about custody earlier. I have to talk about it again. This is a big issue for institutional investors. This is almost like the old bearer bonds. In the Wild West, if you could steal the bonds, you had them. It was as good as money. Still very much like that. If you have the key, you own the security. You own the digital asset. So this still doesn't sit well with a lot of institutional investors. And so these custodial issues are going to need to be resolved. Good news is people are working on it. Ledger, out of Paris, one of the biggest players in providing both cold and hot wallets. Coinbase is one of the big players. They've been serving the retail market, but now they are developing what they are calling institutional-grade broker-dealer services that will satisfy the sector. Goldman Sachs has even said they're looking at it. Again, they haven't pulled the trigger on it, but we'll see if they pull it together. Circle is one of the big digital asset financial institutions. I know they've been hiring people out of the regulators. In Hong Kong, we've seen them hire people out of the SFC there to come and work with them. And so they are trying to resolve these issues and provide a custodial arrangement that you, institutions, will be happy with. But again, many ways, it's a work in progress. So what are we dealing with here? We are dealing with an asset class that is really in the beginning of its phases. Like the hedge fund industry, we are in the early days, like where it was in the late 80s, early 90s. One of the benefits of that is that there's still a lot of inefficiencies where there is opportunity to capture alpha. If you're looking at it, there's so many similarities to the way that hedge funds developed. Institutions definitely need to be looking at this. However, you have, as I said, special needs that are going to need to be addressed. You're going to have to look at the funds and say, are they able to scale? Have they put the infrastructure in place? Do they have the professional managers with the tools they need to do a good job? Have they resolved the custody issues? When you are satisfied, then you will be able to take your institutional money and put it into this digital asset sector, and it is going to grow just like the hedge fund space did. A lot of people are working on it. They are looking to make digital currency investment accessible to every eligible financial institution and hedge fund in the world. That means you. It's exciting. We're excited about it at NexChange, and I hope that after this talk, some of you are a little bit excited about it and want to have a look at it too. I'm Andrew Work from NexChange. 감사합니다.